Hey guys, welcome to today's session. I'm going to give everybody a minute to join before we jump in. Let me know if this is a little bit too dark. The window's open, but it's about to get real dark outside, and I got my trusty lamp on again. But I understand also this is probably like really dark. So if it starts to get worse, just let me know and I'll stick a light on behind me. How are you doing, legend? Hope you're all good. Hope you're all good, my friend. Hope everyone's had a solid day trading. For me, today's been phenomenal. Currently sat in some gold longs. I'll bring MetaTrader over. Sat in some gold longs. Break out of these highs. We'll see what happens. If this doesn't hit target within the next hour, then generally I probably will exit the position before I go to sleep tonight. Let me load up Epic Pen. Even though this is a fully automated portfolio, as the majority of people are aware, I do have a lot of manual oversight on this. That doesn't mean I get involved in a lot of moves. It doesn't mean I jump in and pretend to be better than the strategies. But if this doesn't continue like that after a big surge like this, generally what we're just going to see is that move get faded overnight, and see some kind of pattern like that. So I'd rather not be saying that throughout the evening. I like my sleep. I like to know that I go to bed flat if possible. So that is a possibility of me closing that position. It's a little bit dark, but looks aesthetic. PWBV. We'll load PWBV in a moment. I just want to give it a few minutes because there was two guys who come to yesterday's session who I promised I would do a review of their strategies today. If they don't turn up, we'll do PWBV first. Let's see what the target is on this. 1, 2, 3. So currently floating to 70. So probably what, 60% of the way to target, perhaps. So we'll leave that for a moment. It's been super frustrating for me the past 24 hours because I mentioned in yesterday's session that I hadn't been trading, but I just kept dropping through positions, and I'm presuming that that was down to loads of traders just going long on gold, and therefore being stagnant wasn't good because everybody else was just surging through the ranks. But you can see I've jumped up 50 positions today, which is great. So I've kind of had a good day and got back within the top 100, which is fantastic. I think my average position should be coming down this month. What's my average position? 318. Yeah, that should. I want to get that under 200 ideally because where does it say? First editions. I know it doesn't say, does it? Is it saying allocations? Yeah, here we go. So 179th. Why isn't that loading a position there? That's strange. It should show a position there because I had allocation. But 179th, 111, 8th, 25th. And then I'm under 100 now. So I'm confused as to why my average is so high. It's probably, presumably, maybe because of April. I don't know. Maybe April, the month before I had an allocation. Maybe my ending quote was like 5,000 or something because I had one trade in April and it was a loser. So I was probably like 5,000th in the rankings, which is probably battering my average DarwinIA position, which is unfortunate. But like I say, I know it's much higher. How doing, Gary? Risk 1%. Howdy. BT Capital. How we doing? Jason Barr. Afternoon. Canis Lupus. Hope you're all good, my friend. But yeah, solid day for me so far. I've really enjoyed the start of Q4. I think like it's felt like a real, I don't want to say easy market. I think that's the wrong phrasing to use. It's felt like a really efficient market or inefficient market, whichever one I like to say an efficient market is one that you can trade efficiently, right? But a lot of people say the more efficient a market, the more difficult it is to trade, which is, in theory correct. But I just feel like there's been, I don't know. I don't even know what it is. I just feel like it's been an easy market to trade. And I know whenever I feel like that, I'm about to go through a big drawdown. You know, so we're probably going to see something like this again, where the portfolio weans off for a short period of time because I feel the way that I do. Which is what it is. Trading's part of the game, right? But welcome to the guys who are joining the session now. If you want your Darwin analyzed, put it in the chat. I do have about 3 people, including Legend, that I need to go through first. But if you was in the session yesterday and you didn't have a chance to have your Darwin reviewed, pop it in the chat and I'll go through it today. Gold looks like it does look like, in my opinion, that it does want to reach higher. But what I might do, I might just scale my stop up here because, like I say, we're getting on. What time is it? 4 p.m. UK time. I'm so bad with time zones. What's that in UK to show Chicago time? Okay, so it's only 10 a.m. in the US. Yes, maybe give it a bit that extra push up. The great thing is, if this was at all-time highs now, I'd probably be more aggressive cutting it. But because we still have all of this, because we're still far away from this kind of area, I'm less bothered about letting it run. The only thing in my head is this area here, right? Is, does it need to keep stretching? I don't know. Maybe if we look at which isn't something that I do on every trade, of course. Like this isn't general practice. Like obviously I automated my strategies for a reason. However, I do like a bit of manual oversight. And if we just check the ATR on gold for the day, because this does help me sometimes if I'm looking to cut a position earlier, then I will do that sometimes. H1. I still find it really weird not opening trading view every day. It's one thing that I do miss. Okay, so we're sat at a daily ATR right now. Let's get SFL on as well. SFL daily ATR. Okay, so that one's not. So what's the settings difference here? 20 period ATR and show current day. Okay, interesting. So that I probably trust that ATR a little bit more. What's the other ATR I have? Neves. Yeah, so Neves ATR levels are the same as what I coded, but the SFL ATR is slightly higher, which is strange. I'm unsure of why that is. I don't know. We'll see. Let's leave it for a moment. I am conscious that I'm not like, even this, right? I like an easy life. This range, now that prices broke out of it and it started to get to ATR levels, it's like there was a term by Traded Anti, don't be a dick for a tick, and it's basically meaning like your risk to reward evolves, right? So my entry is there and my stop is roughly, it's something like that. Okay, and I think my target is, what is it, 4-10. So target something like that. Now, what you could do in this scenario is go, well, I'm moving my stop to break even. It's a quote unquote free trade, which is completely rubbish. Good day, Newcomb. I hope you're doing well, my friend. Because now I'm not just risking the 25 points down here, right? I'm also risking the 38 points or 37 points that I'm in profit. Okay, so my total risk on this position is no longer just this down here. Okay, that's not my total risk on the position. My total risk is now this. Okay, my original stop, so my minus balance, but also my positive balance. I'm not a fan of putting stops to break even. Me personally, I understand why people do it, but I get, like, if my opinion is, if you're putting your stop to break even, you should just exit the position. Unless you have a strategic reason for doing so. Like this trade, for example, looks to me like it could line up for something like this. Classic support and resistance, retest of that high, and then move higher. Why would I put my stop there? Like, do you know what I mean? It just doesn't physically make sense. So yeah, anyway, a little bit of a rant, a little bit of a thought process. We'll leave that for a moment. Let's take a look at this question. ZLEO, when can I get the gold status? Well, let me take a look for you, my friend. ZLEO, looks like I've already taken a look at your Darwin in the past. My first question is, my graph looks good. Will I be able to touch 1 million through investors with this track record? I'll take a look, Legend. I always forget you're tan right. I think we've taken a look at your Darwin before, so I'll take a look at it. I'll open it on Darwinex instead of Zero. We'll take a look at that specific question. But if it's the record that we've looked at before, I won't do a full analysis. Okay. First things first is usually to do a full. Oh no, you're asking gold status, right? You need 8 months minimum track record. So you need the return to be 20%, and you need your return to drawdown ratio to be 2.5. So you can check that here. So you can see your current return to drawdown ratio is 6.1. So it's above the threshold of 2.5. And your return needs to be 20% minimum. And you also need a track record of 8 months. So you can see here, you can break in, depending on how long your track record is, you're going to need a specific type of return. So the one non-negotiable is a track record of 8 months. Return to drawdown of 2.5. Then you can see if your track record's a year, it needs to be 20%, 2 years, 25% return, 3 years, 30% return, and so on and so forth. So you can check that if you just come down on the right-hand side and click this box here. It will show you all of those statistics. But great work so far. Equity curve is super, super stable. 352 out of 9,100 traders. Like, fantastic job. So keep it up, dude. Let's take a look. Legend PWBV. PWBV. Dark Nexus. Yeah, I'm sure we've looked at this quite a few times. That's not the name of an EA, is it? Dark Nexus. Dark Nexus EA. Dark Venus. Yeah, it's Dark Venus that sounded familiar, I think, not Dark Nexus. How long is this? Okay, so you're probably going to be January as well. I mean, first glance, chart looks fantastic. Looks real solid. Let's load it on Darwinex. What was it? PWBV. PWBV. Okay, so first things first, your capacity is a 10 out of 10, which is a real good sign for the question that you're asking. That divergence is unbelievable. Max capacity is like 2 billion. So you won't have an issue scaling. How on earth is that the case? What are you trading? Let's load it up. It tells me it's stuck in ETFs, but I don't know if that's the asset class you're trading. Like generally, when I see capacities like that, it's usually like stock in ETFs traders. Commodities and CFDs. Wow. Okay. I'm gonna ask a question, right? You've got a really high win rate. You've got a really high capacity, and you've come through Petco. Is this by any chance a Martingale EA or a Martingale strategy? 97% long exposure. So you're going long in the season gold. Okay, 4 trades per day, 85% win rate. Losing trades, yeah, you've got a really low duration ratio, which tells me, yeah, this all points towards it being a Martingale system, but then the max excursions don't look too bad. I mean, if this isn't Martingale, fantastic work. Like, great work. If it does Martingale, it's still great, but just be aware that, you know, one day this could come and bite you in the backside if the Martingales work till they don't work right. Other things to be aware of. AIVS looks very, very similar recently on the correlation side of things. ZCWR, that doesn't look too bad to me. AIVS. Darwinex. AIVS. Yeah, it's Martingale, but it's not grid. You know, it's like using. Okay, so you're entering multiple times into a trade. Got you. That makes sense. which still explains why the equity curve is fairly stable. There's not too many like martingale drops, because this is one of my accounts where I run a martingale strategy. I mainly do it as a test account anyway. You can see like down here, whilst the risk engines basically butchered the account, the signal account is still, well, the signal accounts are like a 14% return, so it's up here. And this is kind of what we usually see with martingale strategies. As soon as it goes through a bad patch, it just, dies and falls off a cliff. So yeah, that's my only concern about martingale. Johnny Loxwood, how we doing? How does the Darwinex risk engine treat floating profit and losses, especially towards the end of the month? There's no treatment to that in terms of like the risk engine doesn't look at that. It doesn't look at your stops, targets, floating loss, floating profits. It doesn't look at any of that. It'll only ever look at your exposure. We do that by measuring your deleverage, which is a proprietary metric. It's on the K-base. I would say if you want to do some research into that, I'd go have a read through the K-base. The best practice to do, which I've started doing on these sessions because it's quite fun exercise to do, is copy the K-base, stick it into ChatGPT, and just say, explain this to me like I'm 5 years old and have no clue, and it will like explain all of the stuff that's complex about Darwinex. It explains it, as if you. I think what were we doing before? We measured. We was trying to get the capacity metric and understanding it like we was 4 years old, and it started asking about lemonade stands and stuff like that. So it's always interesting to do. AIVS indices and commodities, 95% win rate. Again, this looks like it's probably martingale in or gridding in just because of the super high win rate, or just going long on gold and Nasdaq. That's probably why there's a high correlation between the two Darwins, but it's nothing to be concerned about. You're below the threshold anyway. Tail, my man, how are we doing? And you, Rob, how are we doing, bro? Tan, so you believe I'm good for the investors who can invest millions? Will I be able to beat THA? I mean, THA is coming down quite significantly, and I mean, rightly so. We have fantastic traders. We have fantastic traders on the platform that I think should have a fairer distribution of capital. I mean, look at this, just constantly just hemorrhaging. Currently sat $17.4 million in investor capital. But considering he had a 4% return last year and negative this year, I like Atu, I like THA. I think they're solid. They can clearly trade over a long horizon. They've just had a tough couple of years with market conditions and stuff. But why would you leave your capital in there for this when we have other traders who are absolutely milking the markets during that period? Which is why we're just seeing a de-risking for THA, and that capital is just flowing into other assets like the index and other stuff like that. So yeah, eventually you'll probably beat THA. Tail, of course I'm under 100. 84, bro. Get to know number 84. Back up to 100. Flipping hell. Loads of people must have just been long gold like me. I might close this position as well because it's doing what I said it was looking like it would do. And to me, without that extension through, I just think it's going to fade for the rest of the evening. So I might call it a day trading and wapow, just close it there. Again, it's not standard practice. I don't do that all the time, but when it's getting like later in the day and I've already had a fantastic day, I'm a little bit more frugal with it. But 84th cheater. I mean, I'm not 84th anymore. I'm also running a couple of FTMO challenges at the minute. They're starting to do quite nice. Where are they? Accounts overview. So up 8. I can't even remember what the percentage is. 9K on this one, 8K on that one. It's 200K. They're both phase ones, 200K on both. So 400K. I need to make 40K to pass phase one. Then I think it's 20K to pass phase two. Just taking it slow and steady. XAQP is deployed on these. And so zoom out, trading objectives on. This is just XAQP. It's running at higher risk than my master account. It's roughly about the same risk, if not slightly less risk than the Darwinex version. But yeah, it's the first time I've traded funding companies in a long time. So yeah, that's interesting. But yeah, to answer your question, you will have no issue attracting investors as long as you what am I doing? What am I doing? As long as you satisfy these, which I went over in a session last week, I believe, and I also sent it into the Discord today. This is what's really important moving forward, okay? Because now we have the index, what we're seeing is less investors invest in singular Darwins, and the majority of them are just coming to the index, right? Because it's already pre-diversified. Now, the great thing for the traders is it's fair distribution of capital, and the capital is leveraged. So it's probably better for them to come through the index anyway. So for you to scale, these are kind of the most important things at the top, the least important at the bottom. It's kind of like a ladder. You kind of pass one check onto the next, onto the next. So the length of your record is the most important. This is specifically for the index, but like I say, now that the more investors are coming through to the index, it's really important. So the length of your track record is number one, your loss aversion profile, which you can see on your maximum excursion charts. So, what's the likelihood that one loss is going to wipe out your account? Trend orientation. So are you pro trend, against a trend, or are you market neutral? There's no kind of preference here, but we have to know how you trade so that we can structure the VAR groups and understand our exposure as a fund. Key asset class correlation exposure. So, are you pure indices, gold, crypto? Do you trade FX? The reason we know that, again, is for diversification on the index. On the index side of things, for example, there's no point. You might have made 10% last month, just longing gold into all-time highs, but so might have 500 other traders, right? And it's like, okay, well, why should the AUM go to you over the other 500 traders if you're all doing the same thing? Strategy, discipline, and consistency, which is a huge one. This is why I always talk about your VAR curve. That's why I always talk about this chart being not good or bad, but needing it to be consistent. I've seen VAR charts go up, down, up, down, up, down, up, down. As long as this is consistent, that shows that you're doing the same thing every day, every week, every month from an exposure perspective. Okay, so you're not like tripling risk because you had a bit of FOMO and missed out on a trade yesterday, or you're not doing stupid things, basically. So we judge you on your discipline and consistency. We do that through the various metrics that we track to get an unbiased perspective, because of course everybody's going to say, oh yeah, I'm consistent, I'm this, that, or the other. But the metrics don't lie. Strategy, execution type, algorithmic, discretionary, or mix. Again, it's low down on the list because it's not one of those where we go, we prefer X, Y, Z, or X over Z, let's say. It's one of those that we need to know how you're executing, because we need to be able to forecast. Okay, if it's algorithmic, we know that the consistency is going to continue. The strategy might not be as good, but we know that the consistency will continue because it's a robot basically doing the same thing. With a discretionary trader, we know that, okay, there's going to be human elements that come into play. We know that, the trader might miss a trade, completely obliterating their expected value over the course of a month, year, quarter, however long the time period is. But they also might make trades that, pump up their expected value short term. So it can be a little bit more volatile from that perspective. But that's more for us to kind of understand as a fund. It's not to penalize one or benefit the other over, one over the other. Index drawdown correlation. This is a really important one, I feel, but it's quite low down on the chart because strategies are running at low risk anyway. How much does your drawdown correlate with the index? Because if you and the index go into drawdown at the same time, it's kind of like every time we add a trader like that to the index, the drawdown would get worse and it's less self-hedging, if that makes sense. Whereas what we would like to do is add traders that actually hedge out the worst periods of drawdown for the index, because those traders were making a positive return during that time. So what we can do is smoothen out the equity curve, and instead of having deeper drawdowns, you have like periods of stagnation instead. And then risk management stability. Okay, is your VAR stable? Are you doing the same thing? Are you, having massive losers once every couple of months or something? And so, yeah, these are the main things anyway that I would say you kind of need to focus on. Everybody should be focused on these anyway, apart from like the trend orientation and the strategy type. Like you have that and you kind of have to deal with it. That's more on us. But things like the loss aversion profile, track record, longevity, stop resetting your accounts. You know, just keep trading through the good and bad periods. Having discipline and consistency, that's all on you as the trader. Risk 1%. Do investors look for Darwinex traders more than Darwinex traders? Huh? What do you mean by that, dude? I'm not sure what you mean 100%. Yeah, not sure what you mean. Who else did we have? BEEE. I'm sure I looked at BE the other day because we were talking in DMs, weren't we? BEEE. And then who else did we have? Chat Pika, is the below 10 seconds TP allowed, and also the 1 to 5 negative RR allowed? Yeah, there's no restrictions. The only problem that you're going to find with a 10-second target or a 10-second TP is your capacity is going to be significantly reduced. Like, you won't be able to take much AUM on, not because of us, but your flow is going to be hella toxic if you're getting it. That sounds like to me like some form of HFT or latency arbitrage or something like that. But I don't know your strategy. That's just me guessing. So just be careful with that because your capacity might be really, really low. Can you please explain return to drawdown? I thought higher is better. Yes, of course, higher is better. I'm presuming that because was it you who asked about gold? Yeah, so you was asking about gold. So the return to drawdown, as long as your return to drawdown ratio is over 2.5, you will be able to get into gold if you fulfill the other requirements as well. It's basically just how many times your max drawdown is your return. So if your max drawdown was 10% and your return was 25%, that's a 2.5 times multiplier, okay? Which is the minimum of what you would need. I'm milking the F out of executive. Not yet, you're not. Maybe in January you will. Can you see Darley for a minute? I'll load Darley as well as B. D. DALY. DALY. See if it works with a hashtag. Perfect. Your background is the same as the PowerPoint blue color. I didn't even notice. I did say at the start of the session, if it gets too dark, let me know and I can either change the color or let's try and change color now. Go V. Because that is really dark. Zero. Do investors look for Darwinex traders more than Darwinex Zero traders? No, there's no preference between Darwinex and Darwinex Zero traders. What I've noticed, and this is just my observation, is for the most part, Darwinex Zero traders have been outperforming Darwinex traders for the past year by a landslide. I don't know the reasons why. So we're seeing a lot more capital go through there. But also with the index, again, that's not generally an issue because we have no prejudice to Darwinex or Darwinex Zero as an investor from the index. So like, it's not even a consideration. It's all about those points. Legend, this is my 9th Darwinex account after resetting, and all those accounts got me a lesson. Therefore, now I've got this result. Fantastic. Stick with this one. Don't restart again, dude. You've got this. Rob, I'll send a message in Discord to you about something, man. Okay, fine. Yeah, I think I owe you a reply anyway. So I'll check my messages either tonight, or I'm traveling down to London tomorrow to record some content with Juan. So if I don't come back to you tonight, I'll try and come back to you tomorrow. That goes for anybody else who's waiting for a response, but my DMs aren't flooded at the minute. Is DCA allowed, and do you have futures CME instrument account? Yes, we have futures, and DCAing is allowed. However, if it's Martingale or grid trading, your risk exposure is going to be high, or your value at risk is going to be high. Therefore, you're probably going to see a reduction in size on your Darwin. I know Robbie still needs to finish making the tribe. I'm going to give you a job, Tail. I'm going to employ you at Darwinex, and your job is going to be create Kieran a tribe. That is going to be your only sole role. Anyway, let's get into B, which is this one that we got here. So super stable curve. I really like it. The only thing that I noticed from this is the drawdowns are quite steep, which again tells me you've probably not got a martingale approach, but you probably have a negative risk to reward approach, which is you can see here. So buzz, I don't need any pay. Your pay is when XAQP is open to investors. Okay, so you're in gold, fantastic. Yeah, the sharp drop-offs tell me it's a negative risk to reward system. Generally, you're going to see harsher drop-offs because your wins are a lot smaller, so it takes a lot longer to stack up, but that's fine. Got your first investment, 6K, which I'm presuming is from DarwinIA Hedge Zero to hedge out your exposure from DarwinIA allocations. Ticked over a year, fantastic. One red month, so super solid work there, dude. Let's take a look at what you trade. FX and commodities. I thought you would. I thought you was going to be crypto. Yeah, I thought you was going to be crypto. Interesting. Okay, commodity CFD, 65% win rate, solid. But the majority of your trading is done on FX with a 69% win rate. Do you grid or Martingale? Just out of curiosity, or do you work an area because you have a really high win rate, 70% on average. What's the overall? 69% win rate. So you do have a higher win rate. Your payoff ratio is 0.64 risk to reward. So you're kind of reliant on that win rate, which is okay. That's fine. But obviously, if you go through a poor patch, you are going to see those sort of drop offs in equity, or those kind of steep, harsher curves, or drops in curves. Assets. Shattered dime. Nothing really to be concerned about here. Maybe don't bother with Aussie dollar anymore. I like that you trade quite frequently because there's a decent amount of data here to go on. Obviously, you've got a year under your belt, and we're looking at like 1,500 trades or something. But Aussie dollar, you've taken 133 positions. You've won 71% of the time, but you haven't made any money. I would be looking at this and going, well, on every other asset, I'm profitable. Does it serve me to keep trading Aussie dollar? It's been 8% of your total volume, and you've lost money. Now, the reason that that's quite alarming is because you've got a 71% win rate on that on the pair, and you've still lost money. So that tells me that the edge that you have just isn't as sort of prevalent in that market. So I would just be dropping that, to be fair. I'm usually less aggressive with how I phrase that, but I don't see any reason why you should keep trading it unless you're specifically hedging against other assets or other trades that you have. If you're hedging it out with Aussie dollar, then fair enough. But I don't think it'd be a hedging asset if you've got a 71% win rate. Skip past that because I hate that metric these days. Okay, interesting. Again, this is over a year, right? So we do have a decent amount of data to go on. You've got 2 losing days, which is Monday and Thursday. And there's quite a big difference. I would be trying to find out why there's such a big gap. Okay, so there's not much of a gap between these 3. My computer's going slow for some reason. 1, 2, 3. There's not much gap. Okay, quite condensed. There's also not much gap between these 2. But there's a massive gap between your high performing days and your low performing days. I want to know why that is. Okay, why do on these days you struggle? Is it something to do with your strategy, or is it something to do with your personal life? I don't know. For example, do you work from an office on these days, whereas you work from home on these, and therefore you can watch charts all day? Do you take your kids to school on these days and therefore rush entries as you walk out the door? There's so many things that it can be if it's not strategy related. If it is strategy related, which it could be that you're trying to trade a mean reversion system on a specific day of the week, which is just not going to work. So on a Monday, for example, which is one of your poor days, it's probably not going to work for a mean reversion play because trading has only just started for the week, and therefore it needs to play its first hand before it starts to mean revert. There's so many things that this can be, but I would be trying to actively find out how to close this gap, if at all possible, because you're losing money on these days, making money on all of these days. There's clearly something that you're doing different, or that the market is different on these days, and therefore it's something that I would want to identify. The main way to do it is go through your journal, look at your trades on those days. Okay, did I follow the same plan? Try and diagnose whether it's a personal issue or whether it's a strategy issue that's causing this discrepancy. If it's a strategy issue, you should be able to, well, I say you should be able to, you might be able to work it out from looking at charts, looking at your data, understanding, like trying to find different patterns within that data. If you can't find anything, it's either that it's just an anomaly and you kind of have to go through it, or it could be something to do with your personal life. Only you can do the self-audit on yourself, because only you have the trades and only you have the knowledge of what you do on these days. If you don't do anything different on these days and you act the same, well, again, it's a self-diagnosis that you have to do. I'm just trying to spitball ideas out to you. But it's this is definitely something that I would be looking at trying to close this gap moving forward. It's my time to go. Tan says, have a sweet good night, and to all of you guys, have a good one, dude. Thank you for tuning in. That's the sound the bee makes. Let's take a look on Darwinex. So you also have a fantastic capacity. What is it with all you guys having huge capacities? 525 million. So you could handle $500 million with your strategy. It's wild. Where are we? Market correlation. So you're not even going long all the time. That's pretty impressive. I'm presuming that you're not necessarily a swing trader, but you're holding trades for a long period of time. Yeah, so at least a day. So there's no issue with like quick fills being part of the strategy. Telling me that you probably have a decent amount of or a decent size stop and target, and you let your trades play out, which again helps with your capacity, because the flow is less toxic, as in like you're reliant on solid pricing, spreads being tight, all of these things. Let's say, for example, you have a 10 pip stop, okay, and you get slipped by 2 pips. Okay, that's a 20% additional cost on that trade. Now apply the same if you had a 100 pip stop. It's only a 2% additional cost on the trade. So it's a big difference when you look at it and frame it like that. And therefore, the size of your stop is a big component to how much capacity you have and how much investment you can take. These guys who are running around on Twitter saying they've got a 2 or 3 pip stop, it's just complete and utter BS. You can only trade that on a demo account. On a live account with size, with investor capital, it's just not feasible, because if the investor gets slipped by 2 pips, which at size they probably will at some point, then it's like 100% almost additional cost on the trade, and therefore you might come out of scratch, you might make a bit of money, and the investor might still lose money. So that's super important to be aware of. Okay, let's jump on to Dali. I don't have a full hour today. I've only got another 5 minutes or so, because again, I've got to head out tonight, and because I'm traveling down tomorrow to London, so I've got some stuff to do tonight. So we'll jump on to Dali. I did see this poster. I think you posted this on Twitter the other day, right? When you hit 40% return. Like this is fantastic, right? Big period of growth, little period of stagnation, second leg of growth. Like this is fantastic. I really, really like it. 17K investor capital, and you haven't even hit a year yet. So fantastic work. You need to get some respect on your name, bro, because 40% return or 41% return in less than a year is phenomenal. I would like to see this scaling pretty aggressively moving forward. Tail, Kieran, you asked a couple of times if I'm grid or Martingale, but I wouldn't put it in either basket. It's more like a pattern adaptive average system. If you want, I can DM you exactly what it is if you want. I want your Martingale strategy, please. Now, I understand like when people get in over a larger pattern, it's more like working an area than it is grid or Martingale. The reason I always ask this is because you wouldn't believe the amount of traders that I've spoken to over the past couple of years where they just buy a Martingale EA off MQL Marketplace or off someone online and then just implement it onto any account that they possibly can. How are we doing, Sal? Hope you're all good. And it's just a disaster waiting to happen. That's why I always ask, because it's very easy to tell if somebody is using a Martingale strategy based on a few different things. The dips in the equity curve is number one. That's just like a telltale sign. Who uses grid Martingale? In fact, we'll use Petco as an example because I know I used him earlier, or at least we saw him earlier. Congratulations, Sal. Welcome to the Darwinex family. Welcome to the family. Yeah, in the future you'll be here. I mean, for sure. Build up your record for 3-4 months, and then we'll have a conversation and we'll do some analysis on your profile or on your Darwin. So this is classic Martingale, right? Just a steady equity curve. Everything looks like it's going great. If we just zoom into this, forget that. And this is why I always want to establish whether somebody is trading with a grid or Martingale approach, because this, to me, whilst it looks phenomenal, I'm like, that is so unhealthy, and eventually, like, you're going to pay the price for that at some point. Same way that I have on BYXB, but I've always said that was a test account where I was testing stuff, right? Whereas this is like, I can just tell straight away with this what it is and what it's going to do. And then if we zoom out, what comes right after that? A massive drop off. Okay. And then we move forward because the problem, let's see if we can get a graphic. Martingale. Martingale trading. So for anybody who's unaware, this is what martingaling is. So you'll start entering the market, it moves against you, you'll double up your size, move against you, double up your size again, double up your size, double up your size, and you keep adding size to the position. And then eventually, when all of the trades cumulative become in a profit, you then close out all of those trades for an overall profit, right? Which is great, and it works till it doesn't work. If we take a look at Waka Waka. Yeah, in my effects book. Let's take a look at Waka Waka. This had like a 5-year track record, and then just absolutely like caked it on a 70% drawdown. So if we get that, let's hide the equity growth. So if we look at this chart, you're like, oh, fantastic! Like what a chart that is. If you'd have invested your money in 2018, you'd be a millionaire by now. Okay, because it's just constant growth. Now, if we replace the growth chart with the equity growth, which shows you the actual movements in equity. Okay, so we're not talking about balance here, we're talking about equity. So open profits, open losses and stuff. The chart starts to look a little bit different. Now, if we look at this, it's the same story. Slow gains, looks perfect, drop off, slow gains, major drop off. Now, this was like a 66%, as you can see here, 66.5% drawdown. Before that, the biggest drawdown it had ever had was like, I don't know, 10% or something, which is why whenever I see martingales, I'm always like, it's kind of written in the stars, right? For reference, this is what a non-martingale looks like. So you can't even see a difference. This is XAQP. This is the master account that for my Darwin. You can't even see a difference between the growth and the equity growth chart. They're both exactly the same. If you can see that, because every trade has a stop, every trade has a target. There's no massive unrealized loss. There's no massive unrealized gain. That is way more scalable because eventually a martingale is going to give up. I get what you mean. I just don't like people calling mine full martingale. Yeah, there's such thing as like a soft martingale. So I believe this has a soft martingale element to it, similar to you. There's like a strategy to the pyramid into positions, if that makes sense. Like it's not done based on I'm in a loss, I'm going to double down my size. But I mean, it's the same pattern here, right? It's just these steep drawdowns after like really smooth curve up. And I think this trader specifically adds size when there's confluence or when there's a pattern. So yeah, that's to me isn't necessarily grid martingale. It's more like pyramiding into a trade. Although there's a lot of crossover in what that means for your the volatility of your P&L. Man, you guys, you've all got massive capacities. 8.1 out of 10. So your capacity is 79 million. Like phenomenal. You're never going to have any issues there with scaling. Exactly. It's not martingale, but for 5 year on MQL5, it's more than that. But Dude, triple wrap. You bought your strategy on MQL5 tail. Come on, man. I thought we were friends, dude. I tell you what, let's have a conversation. Tell me what it does, and I'll rebuild it for you with a flare. We'll do a duff and tail flare. We'll add some things to it, and we'll make it better. Yeah, because I don't want using public EAs. Oh, okay, you got it. You're taking the mic. Is that what you're doing? But yeah, I mean your D score must be solid, 59.7, because all your it's actually rare to see a Darwin where it's kind of like there's no reds and it's all you're moving in the right direction. Your wrist stability looks like it needs some work. This will just smooth out over time. No, it won't smooth out of time. Your score will go up with time because of the volatility over here. It's starting to lose its kind of weighting on your current value at risk. So over time, where this percentage of your record becomes smaller and smaller, your score will begin to increase. Experience 6.1. This is just based on your D periods, which is your trading volume or your trading activity plus time. So you're working currently on your 7th D period. I think I'm on the same actually. But basically, all this just measures is how accurate we can say moving forward that your history looks to be. I'm butchering that. How accurate can we say this trader is going to continue to do the same thing for the next year, 2 years, 5 years, 10 years, something like that? Obviously, the more data that we have when it comes to time and the amount of trades that you've taken, we have a more accurate picture of saying, yes, this trader is going to be consistent moving forward. If you start on day one, of course, your experience is going to be 0. If you've been trading for 2 years and you've done 10,000 trades, of course, your experience is going to be 10. Let's take a look. Risk adjustment, 10 out of 10. Open strategy. This is phenomenal, 7.7. So you're 7.7. You're the top one. That makes sense. It's because you're in the 79th percentile. That's why. So this is basically measuring out the efficacy of how you open positions from a time perspective. I'm not going to get into that too much now because we don't have the time to do it. But these are super interesting metrics to look at, your open and close strategy. Comparing it with your maximum adverse excursion and maximum favorable excursion to see if you're leaving money on the table or to see if you've got awful entries. My opening strategy, for example, is really poor. And that's because a lot of the time I have a lot of strategies that trade breakouts, right? So if you're trading a breakout and it, just sweeps a high and then closes back in and then tanks, it's a really poor entry because you basically bought the tops or sold the bottoms. Mean reversion strategies generally have better open strategy score and lower close strategy scores. Breakout and trend following is the opposite. It tends to have worse open strategy scores, but good close strategy scores. Performance 9.7. So you're super high on the Monte Carlo here. So this compares your performance with 10,000 other random strategies operating at the same risk, and you're above 99.98% of them, which means you're in the top 200, which is phenomenal. Loss aversion, your maximum adverse excursion and maximum favorable excursion, also looks fantastic. I mean, you've got one massive outlier here, which for the guys who come to these sessions regularly, I'm not a massive fan of these. That one and perhaps that one, I'm not a massive fan of. And the reason I'm not a fan of these is because if we remove those 2 trades from your record, how different would it look? What would be, these 2 trades? Let's say you was on a train, couldn't get internet. Let's say you was at the hospital, couldn't get internet. Okay. Now what would your record look like? And that's what I try to ask myself when I look at this. Is the person's record built on 1 or 2 good trades and the rest of it's, negligible? Yours isn't, because you still have a decent, like, if you're, what an awful line that was. If your MAE was like, or maximum favorable excursion was like there, and your MFE was like there, which it is, I'd still be like, oh, do you know what? It's pretty solid. This is kind of a bonus, but I don't like to play on that moving forward. I'll be like, okay, well, we need to figure out where the optimal favorable excursion is. So yeah, just food for thought. We are going to finish here because like I say, I've got to dash off 5 minutes ago. So you guys have had me 5 minutes longer than you should have. So I hope you appreciate that, guys. Rob said my cap is getting worse. Yours is better, Kieran. I mean, maybe it's a change that you've had in the way you trade. I know you started taking a lot of trades towards the end of last month. That will affect your cap if you're just getting in and out. Mine's getting better because it's smoothing out over time from when I've added more strategies and increased the load from that perspective. So yeah, mine will get better, and I still think there's a bit of room to go because it's still taking in averages from when I first started trading. So it's going to take a while for it to work that out. What's the idea when withdrawing with the 97? Why not 100? No idea what you mean about that, bro. No idea what you mean. Elaine, hello. Hope you're doing well. I am very well, my friend. Hope you are too. Just got the email that I will be added to the index. So very happy and excited about it. Fantastic work, my friend. Fantastic work. Sorry, I heard a really weird noise and I thought my dog was having like a panic attack or something under me. Yeah, fantastic work. That's a huge achievement. The index is scaling really nicely, and therefore, like, we need good traders, right? There's a flywheel at Darwinex that let's get Epic Pen back. There's like this weird flywheel. Get different colors. Oh, such an idiot. So this is the trader. This is the investors. And this is Darwinex. Okay. So it's like this flywheel that needs each other to perform. If one of them is underperforming, then the flywheel stops. Okay. So what I mean by that, and I think I've covered this before, so this probably won't be kind of new to anybody, but for this whole ecosystem to work, Darwinex has to do the right things from an ethical perspective, regulatory perspective, financial perspective. We have a responsibility to all of our clients, regardless of whether you're a trader or an investor, to have everything correct, okay, to run the business as efficiently as we can. That enables us to take on traders. Now, if we can't find any good traders, we don't have a product then to offer to an investor. So the flywheel stops. As we start finding good traders, okay, and we start bringing good traders into the index and into the ecosystem, we can then attract investors who are going to allocate capital. That investment then earns revenue for Darwinex, right? Powering us to find more traders, powering us to find more investors. If one thing stops working, if Darwinex did something dodgy and shut down, well, guess what? The investors have now lost money or got nowhere to put their capital. They don't now have a relationship with Darwinex, and the traders also have lost AUM and they can't trade anymore. So Darwinex is an integral part. Without any traders or without any good traders, we can't attract more investors. And we also won't get a return. So it tarnishes the brand of Darwinex. Investors are going to leave. But without the investors, we can't fulfill our promise to traders. So we need all three parts of this flywheel to keep moving in the right direction. And that's the main idea behind the index, because we can have more of a control of which traders are allocated capital and control over the investors' decision making. You don't have to go out and build a diversified portfolio of Darwins because we've already done it for you. So congratulations to you for getting that email. I'm sure it's a big achievement for you as a trader, for sure. So relish in it. Have a beer tonight. Have some nice food. Enjoy it, and know that you are one of a select few who has had that email, and that itself should be a really, really great feeling for you. So yeah, Tail said, sorry, this had more than 97 in balance. I don't know why that is, dude. I'll be completely honest with you. I know we wait for minimum balances because, of course, transaction fees can be a lot. So if people are requesting €10 payouts, which believe me, they would, then it slowly racks up, or not slowly, very quickly racks up fees for us as a company. Why it's 97? I have no idea. Honestly, I have no idea. I can't even answer that. So yeah. Nukem said, what size does your account take on when you get added to the index? What do you mean by that, dude? Your account size stays the same, but it depends on the allocated amount from the index. So however much Darwinex Labs decides to invest into your strategy is how much you get. But it will, of course, as with any investor, it will only show up in your dashboard. You won't see it land in your MetaTrader, for example. AUM, completely dependent on Darwinex Labs. So generally, you get an investment from Darwinex Labs first, which is our in-house prop desk. We run that at much higher risk, but it's kind of like a test for the traders, if you will. If you start doing well with the Darwinex Labs capital, you'll then get added to the index. But it's completely dependent on how much AUM the index has and how much percentage of that you're going to be taking as a trader. I don't think any trader has. I think there's one or two that has over 1%, but there's literally like 2 traders. The rest is like split between all the rest. But remember, the AUM in the index is leveraged up. So what you see on the website, it's actually higher when it's distributed out to the traders. Alain, thanks. It's a great achievement. 4 years ago, I didn't know what was trading. I mean, to achieve that in 4 years is phenomenal. Phenomenal work. I've been around the game for 7 years, and even I'm not there yet. Hopefully in January I will be. But yeah, great work, dude. Really, really well done. Tal, I'll figure that out as part of my job as trade maker and balance checker. It's a shame we've just ticked over 1,000 viewers, and I'm about to close the session down. So I appreciate everybody for joining. Anyway, it's always great when we hit 1,000 viewers. I stream this across multiple channels now, so the viewers has increased over the past few sessions. But it's always a shame. Tail, 7 years and only silver. Yikes! Yeah, tell me about it, man. Tell me about it. I mean, I did used to trade on Darwinex with my discretionary system, but then obviously when I gave that up, you know, I had to restart and start from scratch, which I'm okay with. It is what it is, you know. But we're going to be in gold very, very soon, so I'm not really too bothered. But anyway, guys, long XAQP, hashtag long XAQP. That we're going to get that vibe in. We're going to get that trend in at the beginning of next year. So yeah, anyway, guys, we're going to call it an end to the session there. So I hope you all have a fantastic rest of your morning, afternoon, and evening, wherever you are in the world. We won't be streaming tomorrow, I don't believe. I completely forgot when I agreed to stream on Thursday this week with with Edge Wong, that I'm actually down in London. So I might have to reschedule that either for Friday or for next week. Yeah, unless... No, I won't be able to do it. I think we finish at the studio at 5 p.m. So then I'll be having a drink with PIQ Suite and then going home. So anyway, guys, hope you have a fantastic rest of your day, and I will either catch up with you guys on Friday or early next week. Peace out, guys. Have a great one.